Good morning, everyone. Greg here from Master Trader. We'll start off taking a look at NASDAQ futures this morning versus the S&Ps, and here they're moving up to a new, well, it looks like a new closing high yesterday, and they're up here this morning about 18.5 points right now, pushing a little bit further, and just normal price action would suggest this is a point where risk is rising as to a pullback happening, and as this move up has occurred. Now, yesterday was a wide range day. It's up into this area of resistance, and a wide range day after multiple days up historically is an indication of a near-term consolidation or short-term exhaustion. So I would be cautious here with longs, especially on the NASDAQ. On the other side, the S&Ps look like a better place to be, that they may play catch-up here. So the 30-minute, 24-hour chart here is going sideways. Buyers stepped up at support. So, everything's still bullish, although, things have been kind of erratic in that, depending on the time frame you're looking at, of course. I mean, this one's straight up, but look at the 30-minute intraday chart here. Whereas, sideways, blast off, sideways, a little wiggle there, but straight up blast again. A lot of sideways price action, blast off, and here you had this little downside shake. So it trades in a way that a lot of shakeouts going on for intraday traders, but, if you're holding on to this, congratulations. But if you're trading it intraday, you're probably getting whipped around pretty badly, within this time frame anyway, as this is quite choppy. So, looking into today, the trend is still up, but based on the higher time frames here, it just makes sense that we're closer to some type of a stall. Now, S&Ps, they've moved up. Yesterday was a bottoming tail bar in the futures here. So buyers stepped up on the dip. So the same type of downside shakeout going on there. And let's just take a look at the spiders here. And since it's not the 24-hour chart, you got the gap down yesterday, and then prices, just buyers stepped up again. I mean, it is bullish here, so things are looking good. What are they going to do here today? So far, sideways. The best thing they could do to maintain this uptrend would be a little sideways price action and then higher, versus if this gap reversal here was to result in possible measured type of move, meaning this move up and this little consolidation and a move like that, that type of a move would it also suggest an exhaustive type of a move. And then if the internals lined up, that would increase the odds of that happening, which I can show you. The internals have just been back and forth between getting close to a signal and then reversing from there and then back to neutral again. And then, so they've been neutral for quite a long time. So this is our sentiment gauge and this is our breadth. And we haven't had a signal in the other direction since just prior to the presidential election, which was the letter that I wrote at the time looking for the rally was November 6th, and then the results came out, and it's been up since then without any bearish signals along the way. So we'll have to see, if the market was to push higher, these could come into alignment where breadth could reach a bearish extreme, and sentiment could reach a bearish extreme, and historically, we would probably see a correction start within, usually, sometimes it's almost days, but it could be a couple of weeks. Well, that hasn't happened yet, so the trend is up. The internals are confirming that they have not reached a bearish extreme yet, so we go with the trend and the internals until something changes. All right, so this morning we've got UAL down here on earnings. So the airlines, some of them have been doing pretty good, and the transports have led, which is great for the market. But now we got UAL backing off, so that's going to put a little bit of a pressure on the transports. We've got CSX that came out and beat earnings, and they're down, rebounding a little bit here. So that's a concern for the market, just for this morning. CMG was downgraded, so you Chipotle lovers, well, I guess you're still going to love the restaurant, but the stockholders can't be too happy, going from 500 down to where it is here, and odds are, probably continues to go down. And we've got IBM that came out and topped as well, or beat estimates, and it had its little spring to the upside. It's down here, just below 149. So breaking below this base doesn't look good. So just generally, when you have a stock that moves down sharply like IBM has, which opens up the possibility of a counter trend move, and rather it goes sideways and then it breaks that, it just opens up the door to more downside. So this looks pretty bearish unless today turns out to be some type of a miracle reversal back up again. The way it's trading here right now certainly doesn't look like that is in the cards. And lastly, Snap, which we had recommended, is moving lower, and this just looks like it could go to single digits unless it has some type of a miracle reversal again. Here's another example of a sharp move down, and rather than bouncing, it went sideways and then broke again. So very bearish pattern when you have this type of a move, which short term is extended. You typically get that counter trend move where you get the next sell setup, but rather than being able to move up, it goes sideways. And the 20 MA is a pretty good guide as far as a reference point. Just subjective reference points aside, look for the first turn or swing high that forms, after the drop. And if it can't get beyond that, by the time it gets to the 20 and the retest of that resistance, it's usually going to be a pretty good reference point to sell it again. All right, guys, have a great trading day, and we will talk tomorrow.